In this video, we will discuss the basic principles of smart money concepts in gold trading. I will explain to you what is a fair value and how to identify it. We will discuss how fair value relates to supply and demand and why is it so important to learn to identify the imbalance. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First, let's discuss the absolute basics, how the price of gold is valued. Gold price is determined by basic economic principles of supply and demand. Supply is defined by the actions of sellers and the selling volumes, while demand is defined by the activity of the buyers and the volumes they wish to purchase. When supply exceeds demand, it leads to a decline in prices. Increased selling pressure leads to lower prices as the sellers compete to attract the buyers. The recent bearish movement that we saw on gold occurred simply because of the excess of supply on the market. When demand exceeds supply, we see an increase in gold price. For example, this rapid bullish movement on gold on a daily time frame occurred simply because of the significant excess of demand on the market. The excess of supply or demand on the market is also called the imbalance. The imbalance causes a strong bullish or bearish movement on the market. However, such moves do not last forever. Look at this bullish rally on gold. Even though here we got a clear excess of demand, at some moment the market reached some important resistance. The market reached that and then the market stopped growing. It means that the market found a local equilibrium. The market found the local fair value, and for that reason the market stopped growing. All the excess of demand was absorbed by the supply. At some moment reaching a particular price level, the price will stop falling or growing and the market will find the equilibrium, the balance in supply and demand. Such an equilibrium is also called a fair value. When the market finds a fair value, it usually starts trading in sideways. The sideways movement usually forms a horizontal range, a horizontal parallel channel. Look at the recent intraday bearish movement on gold on an hourly time frame. We got a clear excess of supply here, but then the market reached some important support, and once that support was reached, you can see that the market started to trade in sideways. You can see that the market started to trade within the range. Such ranges signify that the market participants, the buyers and the sellers, agree about current prices. It signifies that the market found the equilibrium. Within that range, the market finally found the fair value, and the excess of supply was finally absorbed by the demand. Once you spotted a fair value horizontal range, you should remember that the market may stay within that for a very long period of time. The trigger that will make the market participants reassess the fair value is some important fundamental event. It can be the surprising geopolitical or economic factor that will create the imbalance on the market. You can see that the market spent a substantial period of time within that range. But then because of some news, the range was violated to the upside. The broke out of the range, the candle close above that is the clear sign of the imbalance. It signifies that, again, the demand started to exceed the supply, and for that reason the growth initiated. And also remember a very simple rule. The market tends to find a fair value around significant liquidity zones. For that reason, it is so important for you to learn to identify them and to pay close attention to them. Please note that the fair value ranges form on any time frame, and on any time frame you can apply the ranges for trading the market within them, buying the market from the support of the range and selling the market from the resistance of the range, and looking for the imbalance, looking for the violation of one of the boundaries of the range. Let's analyze gold chart on a daily time frame from a fair value, supply and demand analysis perspective. We can spot that here we got a very strong bullish rally, and here we got a clear excess of demand. Then the market reached some important resistance. You can see that once that resistance was reached, the market started to trade in sideways, and a wide horizontal range was formed. Supply and demand found the balance, the fair value was found, and you can see that there were a lot of nice trading opportunities from the resistance of the range and from the support of the range. Then some important US fundamentals made gold bullish. again, and we saw a clear bullish imbalance here. The range was broken. The fair value, the previous fair value that the market found was no more valid, and the market started to reassess the fair value. And quite quickly a new fair value was found. After the violation of the resistance of the range, you can see that a new range was formed here. The market started to trade within the boundaries of that horizontal range. And now this horizontal range gives us the fair value of gold. And for now, while the market is staying within the boundaries of the range, with my students, we are selling the market from its resistance, buying the market from its support, and we are waiting for the imbalance. And if we open the economic calendar for today, we can spot that today we are expecting important high impact US fundamentals. Why this high impact US fundamentals are so important? Because this news can be the reason for the imbalance. The negative news may make gold very bullish, and the negative US news may make the market violate the resistance of the range, and it will be the trigger that the market will go higher and look for a new fair value above the current price levels. While the positive US news may make the market very bearish, the market may violate the support of the range and drop lower. Or the news may not affect the gold prices at all, and the market will keep staying within the boundaries of the range. And by the way, one more thing to note is that once you see the imbalance, once you see the violation of the support or the resistance of the range, remember that the market will look for a new fair value around the liquidity zone. And for that reason, on gold chart, it will be very important to analyze the liquidity zones, because around the liquidity zones, the market will most likely find the new fair value. Let me know, traders, in the comment section if you have any questions. Also, traders, if you want to learn how to trade, if you want to see how I trade live on a daily basis, do not forget to check my premium group. The link in the description below. Also, traders, do not forget to watch my other videos.